Hey guys, welcome to another video. And in this video, we'll be discussing part 2 of the profit exodus. Specifically, we'll be discussing altcoins and how to make sure that we time our entry and exit well, and what we can see as projections moving forward for this next bull cycle. Okay, guys, so as we were discussing in last video, we're discussing the topic of Bitcoin dominance and the golden bull cycle ratio. Now, this is an absolutely fantastic piece of technical analysis and fundamental analysis, and I think is the most important piece of analysis or foundational piece of analysis from a technical and fundamental standpoint that you'll need in order for you to have any sort of real success when it comes to cryptocurrency investing or even trading. Now, to recap, when we start from where we were in 2011 to where we are now, we can see there's a massive price increase from just $2 all the way to 57,000. Now, the key here, because of the intrinsic nature of how Bitcoin was designed and coded by Satoshi Nakamoto, for those of you who are not aware, every 4 years we have a Bitcoin halving or a halving event. Now, if you heard that term, Bitcoin halving, all it really means is on the blockchain network, the miners who are responsible for or make themselves responsible for allowing transactions to go back and forth between one party to another on the Bitcoin blockchain network receive rewards. And every single 4 years, or roughly around about 4 years, those rewards are cut in half, okay, which seems mean, but this is to have the effect of having limited supply. Although, yes, Bitcoin has an intrinsic limited maximum supply of 21 million, which is absolutely fantastic and important. But really where the halving matters or where the halving comes in is to help create a system which is de-inflationary in nature, but also allows Bitcoin to be a store of value and not just another currency, okay? Bitcoin is a digital asset more than it is something I would say for as another cryptocurrency for transacting, okay? Is a store of value, okay, because of its intrinsic nature, because over time, the design that Satoshi Nakamoto went for, which is to combat what we have as fiat currency. And as I said, funny enough, the inception of Bitcoin really came in 2008 when we had the last financial crash before 2020, okay? And I believe many people's eyes open. Many are still blind, but I believe some people's eyes open to the realization that fiat currency really isn't worth anything at all. And so Bitcoin came in as a fantastic solution with a limited supply that we actually know the maximum limited supply, opposed to fiat currency. Now, with fiat currency, I always say in the academy with my students that the amount of money that can be printed or currency that can be printed by a central bank is limited to how many trees there are. In other words, there's almost no limit. They can continue to print currency and print currency and print currency, and which isn't a good thing because anytime you print more of a currency in terms of paper notes or minting coins, it devalues the currency. And we've had a massive devaluation over the last 100 years at least. Okay, for example, with the dollar in 1913 at the inception of the Federal Reserve, we've had the value or the buying power of the dollar go from where it is as $1 all the way to where it is of roughly about 7 cents. Okay, so it's going to take you about at least, if we do the maths here, about 15 times or 16 times the money you have today in order to purchase something in 1913, which is absolutely crazy. Okay, and so I think the deception is that nominally money seems to have increased, or in savings accounts money increases, but in terms of the buying power, that's really what causes somebody to have wealth or to have power, is what can that currency purchase you or acquire for you. Okay, and this is the reason why Bitcoin is such a fantastic, I can't even call it a tool, but a fantastic system of or class of asset that saves us all from the devaluation and inflation that happens almost every single day. Okay, So if we have a recap here, from the bottom where we were in in 2011, of roughly around $2. When we got to the first halving, we can see in this first halving, we had an exponential increase. Okay, now at this period of time here, this exponential increase we see here, okay, we went from roughly around about $12. So if I put my line here, so roughly $12 to $13 roughly, all the way up to this first spike here of about $254. So this first movement from 12 to 254, we're looking at about a gain of at least 20x, okay, plus, okay. And then we see the price pull back to around this area here, so $64. And then we have another low at $84. And then from 84, we see in this last part of our movement here in this bull cycle, we have this exponential movement and we get to the top roughly around about here of $1,120. Okay. So in this first cycle of movement we have here, this first bullish run, you know, all the way up to about 1,154. Okay, we see that the major part of the movement, we had a massive movement from the halving, but we see a major movement in the last parts of this bullish run. Now, if you're wondering what the 51 to 49% is, please watch the first video again. I discussed this in a lot more detail. But after the halving, okay, because this happens every 4 years, we can calculate to quite a high degree of accuracy roughly where our next cycle is going to happen from. So if I was to move forward from here, once we get to the top, we see the price gets to its bottom, and we can see after this high, we have a year or so. So if I get to the next higher high, so lower high after this high. So from January 20th of January in 2014, all the way into 2015, the price drops from about where it was of roughly about $1,000 all the way back down into this region here of about 159. Okay. And then moving forward, when we get to 2016 May, so 2016 May, if we get to 2016 May here, then into June, we have the price action here of $541. So $541 here, or let's just call it $500 at the second halving, we see the price gets all the way up to roughly about $20,000. Okay. So you can see the pattern here from these last two cycles after the halving or after the reduction in rewards. Okay, so the halving of rewards. So first we had 25 BTC for every block mined, and it's gone down to 12.5, and now we're at half of that at 6.25 in the third halving. Okay, now what we see here is that in the last moments of the bull cycle after the halving, we see that we have these exponential movements all the way up to the 20, or in this case, up to 20,000. Okay. Now, the scenario that we have here is the same thing. We can actually time this every 4 years. We've just had the last halving in May 25th, 2020, and the price stayed stabilized around about $10,000. And now we've got to a point where the price has gone up to $55,000, $57,000 so far from where it is. And we're not at the end of this bull cycle. Now, the first 50% or the first 51% of the bullish cycle starts off from the bottom to roughly when the halving happens. Okay, that's the first part that we get. All right, so that's 51%, and that's 514 days. Now, from the second halving, from the second part after the halving, okay, we have 504 days. Okay, if we calculate 49%, that will give us 504 days. So 504 days from May 22nd should give us September 28th. So in terms of timing the high of Bitcoin, which is the most important thing we want to have as a foundation, we're looking about the last week of September to see the highest point before we get into the next bearish cycle. Now, one of the things that I would say is different. Now, the timing, as you can see, we have a different number of days each time. The timing and also how much the price moves by still has fundamental reasons aside from just this intrinsic nature of the supply decrease in terms of the mining rewards. Aside from that, we also have the fact that in each cycle, we've had different levels of money come in, okay, and different, if you want to call it, money aggregates. Now, for those of you who are familiar with money aggregates, then it will be helpful. If you're not too sure about money aggregates, I will be doing a video on that to help you understand that in more detail. But if you look at the money aggregates, Bitcoin is probably one of the greatest investments, if not the greatest investment in modern history. And when Bitcoin came around, retail traders, okay, or the laymen were people who actually had the opportunity to get in first. Okay, so in these last two halvings, most of the money, if not, I wouldn't say if not all, but most of the money within the Bitcoin cryptocurrency market cap has come from retail traders. Okay, and because it's come from retail traders and investors, we've had massive movement. We still had exponential movement from $2 to 20,000. However, I believe that this bull cycle will be different. And the reason is because for the first time from 2020 moving forward, we've had a lot more institutional money. So M2 and M3 money. Now, money aggregates, M0, M1 is just normal money that comes to the normal person through their bank account. M2, M3, we're dealing with money that comes from the institutional side. So the deep pockets. Now, for me, this is exciting because this means that the outlook for Bitcoin in terms of the exponential movement we're expecting near the end. Now, this is the key here. The last part, or the parabolic movement that we're looking for, these massive movements happen at the last moments of this bull cycle before. That's when we see the final movements really, or the last massive push, okay? Which is where we want to be timing to prepare ourselves well to know what we're going to do next, okay? But moving forward in this bull run, okay, now that we have institutional money involved, I believe that number one, that will create a lot more stability in the price. As you can see from the first halving, we had a lot more spiking taking place. November 2011, we had a lot more spiking. There were a lot less exchanges during that period of time, okay? And you can see a lot more spiking in the price action here, all right? In the second cycle we've had here, you can see that we've had spiking, but we've had a lot more stability in the price. Even in the bear cycle, we've had a lot more stability moving forward if you watch the price carefully. If you're a trader or a technical analyst, then you can see what I'm talking about. There's a lot less spiking taking place as time goes on. From this first cycle to the third, you can see that the candlesticks are smoothing out a lot more. Aside from this massive spike in 2020, which is more of an anomaly, but we've had a lot more stability in the price action as more and more, I would say, deep-pocketed institutions are getting themselves involved in Bitcoin. Now, for this reason, I believe that in this bull cycle, we may even see some price action we haven't seen before. For example, even though we're saying the 28th, which is what we're looking for, the 28th of September, to be exact, 2021 would be 504 days where we expect the top of the market to really hit at. But if that is the case and it does happen on that day, then that's fantastic. But in this bull cycle, we may see things happen a lot earlier, okay? And maybe it could actually happen a lot later because we have a new fundamental or overarching fundamental happening now within this, or fundamental aspect to the cryptocurrency space in terms of Bitcoin. We may see things that we haven't seen before, okay? Institutional money is a lot more than retail money by a large degree, which means that because of that, we may see even larger gains a lot more quickly than we would have expected it to happen, or the normal cycle for it to happen in September. Also, on the other hand, we may have a delay. The price may stabilize and stay where it is, not necessarily stay where it is from where in that sense, but it may not do as much of an exponential bull run movement as we want, or it may not happen at the exactly, there's a whole lot of things. They may not happen exactly, September 28th is what I'm trying to say. So there's a whole lot of things that can happen, and you can only look at the data you have from the past to make a good, I would say, create some expectation and also create some different scenarios as to what could happen for the future. But this is where we are. We're in the phase where now institutional adoption has come. Now, with institutional adoption, if you were involved with GameStop in any way, whether you traded it or you saw what happened, or if you don't know what happened with GameStop, please go and check that out. But during the period of GameStop, we saw that the institutions, okay, regulations are always bent in their favor once something is going on. Now, this is just a very broad, there's a lot more that happened with GameStop, but the key is institutions have a lot more power than the average person. Okay, and for that reason, if institutional interest gets high enough, which it is starting to increasingly get high for Bitcoin, regulations will start to change in favor to support what they would like to do. That's just the way of how life is, sadly. But at the same time, it's a good thing because this is price positive and also means that in terms of the volatility moving forward, we're going to have even more stability on the price of Bitcoin. Okay, and possibly when the bear market happens and the bear cycle happens, we may not get the price dropping as low as it previously did because there's so much institutional money involved now. It could stabilize the price from dropping lower. There's a plethora of things that can happen, and only time will tell literally as to what is going to happen. But this is where we are now. Leaning off of that point, talking about altcoins, what does this have to do with altcoins? Now, from history, every time Bitcoin makes its all-time high, okay, near the end of its bullish cycle, we see that altcoins have their time to shine about a month after, roughly around about a month after, within that range. And so when you're looking at this as as I said, it's a foundation. The first thing you want to do is to understand this cycle, understand this pattern, so that you can work out now with the altcoins or with altcoins you may be holding or wanting to get involved in, when is the best time to get in and to get out? For those of you who have never been involved in cryptocurrency before, okay, I think one thing that we can all agree on is that you don't want to be buying at the highest price when everybody else is selling or when you should be selling. And so it's important for you to understand this aspect of the bull and bear cycle. Now, for you to understand this, coupled along with this part, now we need to go into my second favorite chart at the moment, which is the Bitcoin dominance chart. So I'm going to switch over here. Let's have a look at the Bitcoin dominance chart. So here is the Bitcoin dominance chart. Now, if you don't have TradingView is free. You can go and sign up, get yourself in there. If you don't sign up, then every 5 minutes, they're going to coerce you into signing up until you do. So just sign up. It is free. There is a paid version that gives you access to more things, but just for you to look at the Bitcoin dominance is absolutely free. Okay. So here is the Bitcoin dominance. Okay. So starting out from 2014 to now, we can see we have this massive bearish movement down here. Now, we're not doing a technical analysis on this in the same regards, but what we really want to do is to look at this from the fundamentals of altcoins and timing. Okay. Now, the key here that I want you to remember, now I could write this out for you, okay, just to help you out here. All right. So when the BTC dominance, so I'm going to call it BTCD, when the Bitcoin dominance decreases, all right, altcoin, you see altcoin price needs to pitch increase. Oh, all right. This is something to remember. The reason why this is, there are several reasons. Now, when it comes to Bitcoin dominance, first of all, this 56% right here means that Bitcoin has 56% market share of the entire cryptocurrency market. Now, to put this into perspective, if I go right here to CoinMarketCap here for you. So CoinMarketCap right now, if we look at the market cap of the entire cryptocurrency market, is $1.94 trillion. Okay, if we round it to the nearest, 2-3 figures here. Now, they run, according to CoinMarketCap, in terms of cryptocurrencies, there's 9,170 cryptocurrencies. And Bitcoin has a 56% dominance in terms of how much market cap or market share it has, which is about 1.07 trillion dollars. Okay, which means if Bitcoin moves, okay, every other cryptocurrency will be affected by the movement of Bitcoin. Okay. And so when we're looking at altcoins, we need to understand that it's going to be very heavily dependent, not completely, but highly dependent on the price action of Bitcoin. Okay. Bitcoin usually moves first and altcoins move after. Now, there are some times where altcoins may be losing in terms of percentage 20-30%, and Bitcoin has done like a gain of 20%, 30%, and it doesn't make much sense. But there are other overarching fundamentals for that. But ideally, when it comes to Bitcoin dominance, you want to make sure that you pay attention to the percentage. Once it starts to drop below 50%, which is the key that we're all waiting for, once it drops beneath 50%, we're going to see a lot more altcoin price action and a lot more price action coming directly from the other projects. Okay, there are 9,169 other projects aside from Bitcoin, okay, that all have market caps and have money within them, and we should see movement from there. So a very simple metric you can keep in your mind is when the Bitcoin dominance is over 50%, 55, 60, that kind of region, we will see altcoin price action and gains. Doesn't mean that we won't, but as the Bitcoin dominance begins to decrease more, we're going to see more room for altcoins to be able to have their movement. Now, why is this important? Okay, when the Bitcoin dominance is at its lowest, altcoins will most likely be at their all-time high. From history, this is what is shown, and history always repeats itself, okay, when it comes to looking at crypto. So if I give you an example here, I'm going to pull up a chart. Let's look at XRP because XRP has been in the news for a while. If I pull up XRP, let's use what we have here. All right, I might actually use Kraken instead. So let's use Kraken to do this. So XRP USD, let's use Kraken and do this. Now, when we're looking at altcoins, just for those of you who do not know what altcoins are, any coin that isn't Bitcoin is an alternative coin, or what we call an altcoin for short. So looking at the price action here, so this is XRP starting from 2017 May. And we can see right here, if we were to map this out properly, this is this December, we can see a massive gain. So in December of 2017, XRP was 23 cents. And we see by the end of December, we're at $2.46. And then we get to this massive spike here where the price reaches all the way to $3.34. Okay, now some exchanges may put this down as $3.36, but roughly around that range of 34 to 36. All right, so we see an increase here from this 23-cent mark all the way here, which is about a gain of over 1,000%, roughly about 1,500%. Now, if we look at the Bitcoin dominance during the same period of time, what would we see? So if I pull up the Bitcoin dominance here, now during that same period of time, starting from December, so the same period here in December, we see Bitcoin dominance was at 70% at the beginning of the month. And at the all-time high period of roughly January 2018, Bitcoin dominance was all the way down to 37.57%. Okay, so we have almost half in terms of percentage of Bitcoin dominance. And at the same time, we see right here, there's a massive spike in the price around this same period. Okay, so when Bitcoin dominance is at its lowest, okay, that means that the market or the altcoin price action or the money moving in altcoins is increasing massively. Okay, in other words, more money is going into other cryptocurrency projects and not into Bitcoin, if you want to put it that way. Okay, in simple terms to remember it. So this is the pattern that we see. There's an inverse correlation here. When the price of an altcoin is reaching its all-time high, which is the all-time high we can see here for 2018 on Ripple, we can see that Bitcoin dominance is at its lowest. Okay, so if you're now, depending on what time you came into the market and how much money you have, most of you may be holders of altcoins instead of Bitcoin. You may have a few bits of Bitcoin, but really for most, you have most of your money within altcoins. And so your mode of, your modus operandus, or how you're going to address this, is very simple. You want to keep your eyes on the Bitcoin dominance at all times. Okay, of course, you want to look at the intrinsic fundamentals of the projects you're holding, the news surrounding them and etc. But really what the key here is for you to be able to time what's going on in terms of Bitcoin is going to have to be the timing of when the price, especially if we get below 50%. Now the 50% mark is right around about here. Okay, and the last time we had this 50% period was roughly around August, September. Okay, right now Bitcoin is still dominant compared to every other crypto is at 56%. So it's got more than 50%. So it has more of a say over the price of altcoins than altcoins have a say over itself. If you, as soon as it gets to the 50% mark and below, now we're stepping into territory where altcoins are starting to be free to be able to do the exponential gains. Now, in comparison, if I was to pull up Bitcoin, and I'm going to do this organically here, so BTC USD, I'll use the same exchange if it's available, or if Coinbase is here, I can use that, it doesn't matter. So if I pull up Coinbase and I put on the full feature chart, let's have a look in comparison to what we see here. Okay, so from where we were, let's go from 2014. Okay, now we see here December, what do we have? So this is very important for you to see the comparison. Now, sadly, I can't put the two charts together because we're going to get percentage lines and it's going to look messy. But if we look at what we have here, December 2017, all right, this is when we see the all-time high, okay, for Bitcoin at, according to Coinbase, we have $19,907, okay, for one Bitcoin. And this is in December, and we see right here in January, the price starts to dip down and we get to the low of 8,000 within the same month, okay? If we look at Ripple, during December, we did have a pump. So we see December 2017, there was a good pump here. So same period of time, we had a good pump. However, the all-time high, which is the key here, all right, for us to know when to get in and get out at the right time, was 1 month after. We see January 2018, okay, whilst Bitcoin was dropping in price, you see here that Ripple gets to its all-time high. Now, if it seems to be biased, I'll pick up on another pair. Let's look at something else. All right, I'm going to pick one at random. We could even pick out Ethereum if you would want. So if I go to Ethereum here, so Ethereum is the same scenario. So if we look over here in January 2018, so December, we did have a good pump. The price went from $424 up to $877, okay? And then moving forward, when we get to 2018, which is where Bitcoin dominance was at its lowest, we see right here, we get the all-time high, or the previous all-time high for Ethereum at $1,421, okay? So again, 1 month after, okay? And I could continue to do this cycle, but you can see the pattern here. Bitcoin, the key here to always remember, and I think I'll write it down so you don't forget. I'm gonna write this right here for you. Bitcoin pumps first, altcoins pump after, okay? Always remember this, Bitcoin pumps first, altcoins pump after. And so the metric you want to be looking at, aside from looking at the project and fundamentals, now don't get me wrong, when we're looking at that 1 month, I'm considering it a window of time instead of exactly 1 month from September 28th or October 20th. Now, if it happens exactly like that, well, that's even better. But I don't expect it to be exactly set in stone. I'm sure there will be some, anomalies in places. Some may delay slightly, some may do beforehand, some may do at very close to the time Bitcoin pumps and etc. And those are its own intrinsic fundamental properties of that project or of what the altcoin you're holding. Okay, so when it comes to looking at this altcoin Bitcoin scenario, you always want to keep this in your mind. If you're not a holder of Bitcoin, that's fine. But what you want to do is you want to make sure you get yourself in a place where you understand exactly you have your eyes on the dominance and you have the eyes on your project. Okay, and of course we'll be doing more videos on how to study projects, well, how to keep updated with them and what to do to keep yourself in the know so that you don't miss out on any of the great gains that will and can come from cryptocurrency projects. Okay, so summarizing, if we're looking at what we have here with Bitcoin, we can see this pattern over and over again, and we should expect the same thing to happen very soon again. Okay, for the moment, the price has grown exponentially since the halving. and it should only increase, but we want to see how we can control how our gains are, are given to us from the market. So my point of advice to end of this video, make it very simple. All right. I'm going to write these down here, 3 pieces of advice that I can give you, and then we'll be out of your way. So advice number one is to keep your eyes on the BTC dominance. Okay. Now, underneath this, when you're keeping your eyes on the BTC dominance, the 2 metrics you want to keep your eyes on is number 1, when the BTCD is above 50%. Okay. That's the first thing. And the second thing you want to do under point 1 is when the Bitcoin dominance is beneath 50%. Okay. When it gets beneath 50%, now you need to really start to be thinking as to what is going to happen, or what, let's change this to B, what is going to happen with your project. Okay. When it gets beneath 50%, okay, you still want to be looking at your project. You want to start to plan your exit. Okay. So I'm going to put this across here, prepare for exit. All right. When the BTC dominance is above 50%, okay, there is still time for entry. All right. So altcoin entry, or you still have time to have entries within. I'm not saying that you shouldn't, you should get into a project, but when the Bitcoin dominance is above 50%, you have the chance for entry. Okay. You still have the chance for entry. So I'll put this here, entries and altcoins. So if I put it this way, it might help you. So you can still have entries on altcoins. Now, to help you not feel confused by how it's written, what I mean to say is that when we have a Bitcoin dominance above 50%, it's still okay to be involved in Bitcoin, in altcoin projects. And even if it drops below 50, there isn't a problem with it to be within some projects. The only thing is, if you're already holding some projects or you're already in cryptocurrencies, you don't want to be loading up your positions during the time when the Bitcoin dominance is around 30 to 40%, because you'd be buying up around about the all-time high. Now, I mean, if you're trying to scalp or something and you want to grab a quick 50% on the last parabolic movement, then I understand if you're a trader or you're an investor. But either way, for me personally, right now, the opportunity to get into altcoins or to get the best prices will be whilst Bitcoin's dominance is still dominant. In other words, the Bitcoin dominance is still above 50%. Once it stops to drop beneath, I'm not saying that we should prepare for exit as soon as it hits to 50, but what we should be doing is starting to have the plan of how we're going to exit out of projects, or not necessarily exit all of our positions, but how we're going to start to take profits from our positions. Okay. Number 2. Okay. Whenever my second piece of advice when it comes to your altcoin is to regularly keep up to date with news. Okay. So second thing I'll say, very simple points, nothing spectacular, very, very simple pieces of advice to help you. Second thing is to, so I'm going to put this here, regularly keep up to date with altcoin project news. Okay, so the key here is that you still need to do your own diligence, your due diligence, or do your own research, or DO as we say. And you want to make sure that you keep that regular updating of your project to find out what's going on. Are there any new updates? Because these are things are important. Okay, many cryptocurrencies, for example, have had redenominations where they've changed a reduced amount of coins, or for some people who just want to hold with cryptocurrency investing, is probably one of the most active types of investing for the moment. If you're investing in a project, you need to make sure you keep your eyes on all aspects. There are some projects who For example, there's some people who are holding XRP who don't actually know that XRP has been delisted from many exchanges, but yet they've kept their money in XRP within those exchanges up till now. They have no idea about what's going on because their mind is just about the percentage gains. But if you want to get into altcoins and have profit, it's not good enough just to be able to find a good project and say, yeah, this one is going to do well. I'm going to put my money in there and leave it for 5 years, because you can come back with zero, because we're still in the era of cryptocurrency where there is a mass adoption. There is a lot of things being put in the framework. There's a lot of the foundational frameworks for cryptocurrency still being, put in place. And so you do need to keep up to date with the regular altcoin news of your project. And number 3, I would say always follow my videos and like and subscribe. And I'm joking. Well, I'm not joking. Always make sure you like and subscribe this video, share with your friends as we post more content. And number 3, what I would say, okay, is to study the price action exchanges volume. Okay, and I'm going to put this here for you. So you want to study the price action exchanges volume, and this is specifically, now I'm going to put this here in brackets so it's not confusing, the exchange your altcoin are on. Now you may have one altcoin, so I might put this here in brackets. So your altcoin or altcoins are on. Okay. This is my 3rd point. Okay. Now let me move this down here so it makes sense. Now this is an important point, because if you're planning for an exit, you need to make sure you have a place you can exit from. So for those of you who may have held your coins, or you're holding your cryptocurrency within cold storage or cold wallets, okay, you want to be making sure you have your eyes on the project news and also on the Bitcoin dominance. But then you want to understand the exchange volume, because just like with some stocks, especially in the penny stocks area, just because the price is moving around and you've done 1,000% gain doesn't mean that you'll be able to liquidate your position to get the profit out. If there isn't a high amount of volume or liquidity within an exchange, you're not going to be able to take your profit out of the project that you're involved in. Okay, so this is an important point that I want to get over to you for you to remember. So I hope you guys enjoyed this video. Please like and subscribe and share, and I'll catch up with you guys as soon as possible. Take care.